For 5 years, Michael Saylor told the entire world one thing over and over like a prayer. Never sell your Bitcoin. He said it on stages, on podcasts, in all caps posts at 2 in the morning. Never sell. Hold forever. And this month, his own company quietly gave itself permission to sell up to $1.25 billion of exactly that. Not because he suddenly stopped believing, because the math finally cornered him. And once you understand why, you'll see that the ending was written into this machine from the very first day. Let me start with who we're talking about, because the story only lands if you understand how far the fall is. Michael Saylor runs a company, now simply called Strategy. Back in 2020, it was a sleepy software firm named MicroStrategy. And Saylor did something no serious public company had ever done at that scale. He took the corporate bank account and poured it into Bitcoin. He started with $250 million. Then he kept going. And going. Today, Strategy holds around 847,000 Bitcoin. That is roughly 4% of every Bitcoin that will ever exist, worth somewhere near $50 billion. One company, owning a slice of an entire asset class. And Saylor didn't just buy. He built a religion around not selling. He mocked people who took profits. He talked about Bitcoin like it was oxygen, like selling it was a kind of moral failure. Never sell wasn't a strategy tweet, it was the whole brand. It was the reason a certain kind of investor bought his stock instead of just buying Bitcoin directly. They were buying the conviction. They were buying the man who would never, ever blink. Now, the first crack actually showed up quietly, weeks earlier. Back in late May, Strategy sold 32 Bitcoin. A tiny amount, almost nothing. But it was the company's first sale since 2022, and it was done to cover a dividend payment. At the time, most people shrugged. In hindsight, it was the tremor before the earthquake. The first small admission that the dollars had to come from somewhere, because then came the shock. On June 29th, Strategy's board authorized the sale of up to $1.25 billion of Bitcoin. And this wasn't just paperwork sitting in a drawer. In the first week of July, the company sold 3,588 Bitcoin for about $216 million. That is the single largest Bitcoin sale in the company's entire history. 32 coins in May became over 3,500 in July. The man who built a cathedral to holding just became a seller. So the obvious question is the only one that matters. Why? And here's where I have to be fair, because there are two honest ways to read this, and I'll give you both. Let me give you the company's version first. Strategy will tell you this is nothing. $1.25 billion is a rounding error against $50 billion in holdings. The sale doesn't obligate them to dump anything more. It's just prudent liquidity management, building a cash cushion, covering some obligations, keeping the machine healthy. In their telling, this is a responsible adult trimming a tiny sliver to stay flexible. And honestly, on the raw numbers, they have a point. 0.5% of your stack is not capitulation. But that framing skips the part that actually matters. And it's the part I want you to really sit with, because it's the engine underneath everything. To understand why Saylor is selling, you have to understand the machine he built and why it only works in one direction. Here's the mechanism in plain English. For years, Strategy's stock traded at a large premium to the actual Bitcoin it owned. In other words, if the company held $10 billion of Bitcoin, the market valued the company at maybe 15 or 20 billion. That gap has a name in the industry. People track it as MNAV, the market value versus the net asset value. And that premium was the magic. Because when your stock trades above the value of your Bitcoin, you can print new shares, sell them to eager investors, and use the cash to buy even more Bitcoin. Every share you sell adds more Bitcoin per share than it dilutes. It's accretive. It's a flywheel. Issue stock high. Buy Bitcoin, the story gets bigger, the stock goes higher. Issue more stock. Buy more Bitcoin. Round and round. For a while, it looked like a money machine that could run forever. But a flywheel only spins one way. And in late June, something happened that had never happened before. Strategy's MNRV cracked below 1. For the first time ever, the market valued the company at less than the Bitcoin sitting in its own treasury. Read that again because it's the whole story. The premium didn't shrink, it inverted. The market started saying, we would rather own the Bitcoin directly than own your company that holds it. And the moment that premium dies, the machine doesn't just slow down. It seizes. Because now, if Saylor prints new shares to raise cash, he's selling them below what the underlying Bitcoin is worth. That destroys value for existing shareholders instead of creating it. The one tool that powered the entire empire, issuing stock at a premium, is suddenly a weapon pointed at his own investors. He can't use it. And that's the trap, because the bills don't care about his conviction. Over the years, Strategy raised a mountain of money by selling preferred stock. And preferred stock comes with dividends, real cash payments, owed on a schedule in dollars. Here's the number that should stop you. Strategy owes around $1.71 billion a year in those dividends. And its cash pile, around $1.4 billion. Do that division. That's roughly 9 to 10 months of coverage. Bitcoin, for all its beauty, does not pay a dividend. It doesn't generate a single dollar of cash flow. So you have a company with a $50 billion asset that produces zero income and a very real, very recurring dollar bill it has to pay. When you can't print shares to cover it anymore, there is exactly one place left to get the dollars. You sell the Bitcoin, the thing you swore you'd never sell. And you can already see the strain. One of Strategy's preferred stocks, a security specifically designed to trade near $100, dropped to around 71. That's the sound of investors who were promised stability suddenly doing the math and realizing that never sell was a mood, not a mechanism. Some of them feel genuinely betrayed, and I don't blame them. So, here's where I land, and you're free to disagree. I don't actually think Saylor is a fraud, and I don't think Bitcoin is doomed because of this. This isn't the end of Bitcoin. It's trading somewhere around $64,000, and plenty of serious analysts are calling this whole panic mostly noise. If anything, some of them think it's a buying opportunity. Bitcoin will be fine with or without Michael Saylor. What broke here isn't Bitcoin. It's a story. Never Sell was always marketing dressed up as principle. Because the honest truth is that Saylor didn't build a conviction play. He built a leveraged bet with a beautiful narrative wrapped around it. And leverage always sends the bill eventually. The flywheel that looked like genius on the way up becomes a vice on the way down. And the exact same reflexivity that pushed the stock to the moon can drag it back through the floor. He didn't blink because he lost faith. He blinked because a machine built on a permanent premium met the one thing every market eventually delivers: gravity. And this is the part that matters for you, whether you own a single Satoshi or not. Be very careful with anyone who turns a financial position into an identity. When Never Sell becomes a personality, it stops being analysis and starts being a trap. Because the market doesn't care what you swore on a stage. It only cares whether the cash flows work. Conviction is not a strategy. Cash flow is. And the moment those two things disagree, cash flow wins every single time. So watch what happens next. If Bitcoin rips higher, the premium could come roaring back, the flywheel could restart, and this whole episode becomes a footnote. But if it doesn't, if that M&AV stays under 1, then these forced sales don't stop here. They become a slow, grinding trickle, the exact opposite of everything Saylor promised. The man who told the world to hold forever may spend the next chapter of his life as a reluctant, permanent seller, drip by drip, just to keep the lights on. If you found that useful, and you want the business stories that actually explain the machine underneath the headline, before everyone else is talking about them, this is the channel for that. Subscribe, and I'll see you in the next one.